next session is really going to be looking at, the energy transformation, looking all things batteries, so supply chains, value chains, and investing really to kind of fill those key gaps in the market. So up here today with me, we have, I'll start from closest to me, so we have Vinit Lakhani, Head of Base Metals Minerals at Tata International Limited. Next, we have YJ Lee, Director at Arcane Capital Advisors. Then we have Chiam, Director of the Singapore Battery Consortium. And finally, Leah, Chen, Editor for Non-Ferrous Metals at S&P Global Platts. So thanks to the panel for joining me today. And maybe just to kick things off very quickly, if we could do just a short introduction to yourselves.
Yeah, hi, morning, everyone. So my name is Vinit Lakhani. I'm running the base metals and minerals trading platform for Tata Group, Tata International, which is the trading arm of Tata Group. The prime focus is to set up the base metals and critical mineral supply chain with more focus on India, but at the same time, we're also trying to get into African and other more non-traditional products and geographies. Before that, I spent about a decade in different trading houses and banks.
Hi, everyone. I'm YJ. I'm a portfolio manager at Arcane Capital. We manage a renewable energy fund that's based out of Luxembourg. This fund, we invest in solar, wind, lithium, EVs, renewable utilities, and the entire supply chains. And later this year or early next year, we're looking to launch a new fund in Singapore focused on the metals that drive the renewable energy space.
Hi, everyone. My name is Yang. So I'm actually at one of the national labs in Singapore in the materials research space. So I look after the battery materials research. But today I'm here representing the Singapore Battery Consortium. The consortium consists of about 60 companies in the battery space, ranging from all the way from battery materials, the battery pack, to the end of life. I'm happy to be here today.
Hello, everyone. I'm Leah. Thanks, Amy, once again for organizing another wonderful year of one-to-one mining. So I'm part of the S&P Global Commodity Insight, also known as Platts, battery metals team. So we look after lithium, nickel, cobalt, and all the metals relating to energy transition. I'm really glad to be here today.
All right, well, thanks everyone for joining us. So I thought we could kick things off with, a lot of the discourse around the batteries has been about this metal shortage that's being expected in a lot of the key battery metals. So maybe we can look at, where do our panelists see some of the biggest deficits in supply in the coming years? And, what are the key risks? And are there any, solutions that you see emerging in this space? So we're going to try to keep it quite conversational between our panelists, so more of a discussion rather than a Q&A. So, Vinit, if you want to kick us off.
Yeah, sure. So look, when we say battery supply chains, it evokes different emotions based on the industry you're a part of, right? I'm a trader, so I'll be wearing a trader's hat most of the time, but I'll still try to keep it a little more, overall holistic. I'm not a technical guy, but look, battery supply chain is not new. It's always been around for a very, very long time. There have been people mining lithium. There have been people mining various other battery minerals. There have been cell manufacturers. There have been OEMs. They've been, pretty much the whole supply chain has already been there in place. It's just in the last 3 to 5 years when we've seen a massive growth in the EV and energy storage industry, that everything's now come to a stage where people are not talking about supply deficits. Nobody talked about supply deficit in lithium 5 years ago. So I think in terms of the supply deficits, actually there are a couple of topics that we probably need to cover. Maybe supply deficit is one. Then one of the things that I think I'd like to discuss is where the money is going in right now across the supply chain. And thirdly, where do we see risks across the supply chain? So in terms of deficits, based on the current structure of the battery minerals, I think the more dominant battery chemistries right now are LFP and NMC, right? Of course, sodium ion is also there, but that's still some time away. in terms of getting on the mainstream stage. So based on the current more prevalent chemistries, I think lithium's going to be in very, very short supply. While we see a lot of money going into the lithium ecosystem, which includes mining to processing and to making the battery cell packs, I think right now about 80-90% of lithium processing capacity is sitting in China. So the whole world, particularly the Western world, is trying hard to deploy all the capital, time, effort, and resources into setting up refining capacities ex-China, right? So there's a lot of push there, but at the same time, and that's not very difficult, to be honest. If you've got capital and you've got reasonably decent law of the land, you can set up a refining capacity pretty much everywhere in the world. But what is missing is I see a big gap in the investment on the resourcing side, because unlike factories and processing plants and refineries, it takes a number of years to set up a mine. It's not easy. It takes a couple of years to even get licenses, then mapping out reserves and getting the mines in, getting the mine sequence right. Logistics is going to be a big challenge if you are particularly looking at hard rock, whether it's Australia or Africa. So I see a big gap on the resourcing side, while all the money is chasing the midstream, the processing capacity, which is great. But I foresee in the next 3 to 5 years, there'll be a big gap on the resourcing side, but because the investment in that space, in actual hard rock mining, is probably not going to keep pace with the development of midstream capabilities.
Yep, that's absolutely right, I think. Where you talk about the mines and versus the processing, the mines have a 7 to 10 year lead time versus the 2 years it takes to build a new battery plant or conversion plant. So that's definitely true. Coming back to the metals in supply deficit, yes, totally agree, lithium. What a lot of people are saying is that, yeah, there's a lot of lithium in the world, and that is true, but lithium in economic extractable quantities within the timeline that we need it, now that's not necessarily readily abundant. And so that's lithium. I think we'll end up talking a lot about lithium later today, but there is another metal that we are quite interested in, and that's actually silver. Why silver? Because right now solar panels account for about, if I recall correctly, about 18% of world silver production. And solar capacity is doubling, trebling in the next 2-3 years. It's not 10 years, it's 2-3 years. It's doubling and trebling. And the next generation of solar panels being constructed today actually use more silver than the last generations. So what happens is that we're likely to see a mini lithium kind of event in silver, where one particular industry suddenly takes up half or even more than half of the global available supply. And how is silver produced? It is mostly a byproduct from gold, copper mines or lead zinc mines. Very, very little in the way of pure silver mines. Scalability, difficult. Demand growth, huge. So that's where we see the deficit.
Maybe I'll just add a little bit. Very interesting to hear about silver. Never thought about that. Actually, from the R&D perspective, the prices of the minerals and how the shortage of that, the abundancy or the lack of that actually drives some of the R&D efforts that we have. So 10 years ago, when I went into battery R&D research, it's all about cobalt-free cathodes that we can try to develop. That seems to be less acute now, especially with introduction of the high nickel content cathodes. And then nickel becomes sort of an issue that we need to look at. Then, of course, lithium in the past 2-3 years has been, during the COVID days was quite expensive. It came down a bit. But that drives the research for sodium-based batteries as well. So these are the things we are doing. In terms of R&D-wise, we do look at the trends of where the mining industry is going, because that provides a possibility of abundance. But another point to add, which perhaps was alluded to, is beside the raw material itself, the process form of the chemicals is very important. So if you look at, for example, NMC cathodes, lithium, very high-grade lithium hydroxide is very important to make those good quality cathodes. So not only where you mine it, but where you can process that and process that at high quality is actually very important for the battery material side. Yeah.
Thanks all for sharing. I feel like you've covered most of the points that I wanted to say. But actually, I feel that surprisingly, or maybe not surprising, our analytics team actually forecast that there will be a surplus in terms of the critical minerals that we mentioned just now, lithium, nickel, cobalt, especially this year. So actually, with all the ramp-ups in Indonesia, this year's surplus for nickel is amounting to 199,000 tons. And for lithium, it's about 60,000 tons. For cobalt, it's less at about 8,000 tons. And to answer the question about deficit, actually cobalt will be the first to go into deficit in around 2026. By about 5,000 tons to the next one will be lithium. So you guys are right about the deficit in lithium. So lithium will go into a deficit in about 2027, which is pretty soon, like 2-3 years time, right? So you've covered about all the battery chemistries like NMC, LFP, and it is true, and I totally agree that lithium is the most in a very precarious position, I would say, because lithium is used in every single type of lithium-ion battery, right? Whereas for cobalt and nickel, it's mainly used in nickel-rich, for example, NMC, NCA batteries. So I would say that the dynamics between these three are a bit different because for China itself, just now, Xingyang has also mentioned about the overseas market pursuing after nickel-rich batteries because nickel is the one that gives the energy density for an EV to drive a longer range. But because higher nickel also results in instability in the battery, so actually within the Chinese domestic market, they prefer LFP batteries, which doesn't use any nickel or cobalt. So for LFP battery in China, actually the market share is close to like 60 to 70%, whereas for NMC it's just 20-30%, especially this year. So I believe that as Vinit mentioned, the changing battery chemistry dynamics will also be one of the factors that affect where demand for these critical minerals go in future.
Yeah, no, absolutely. I mean, you know, there was a lot of talk last year about the growth of LFP, especially outside of China. And in the first panel today, we were talking about kind of the technology risks. So, like, you know, the impact of different battery chemistries as being one of the biggest impacts on the battery metals space overall. So maybe we can go a little bit deeper into kind of what you see as you know, different possibilities within the battery space and what that means for the metals outlook. Maybe Leah, if you want to continue.
Okay. Yeah, I guess different, besides the divergence in NMC and LFP batteries, we also see, maybe I'll give two examples. One will be increasing manganese content in batteries. So as mentioned just now, because nickel, even though it provides the energy density, it also makes the battery cell unstable. So some of the Chinese manufacturers, they believe that by increasing the manganese content in the battery, it would stabilize the battery, but also slightly increase the energy density. So we also see, for example, LFP, they put in manganese. So there is LMFP batteries now already manufacturing in China. And another trend that we see is actually mentioned by Xingyang just now. So if you want to add on, feel free later. Is the sodium-ion battery technology that is gaining traction this year. We have CATL, BYD all looking towards producing sodium-ion battery. And the fact is that I believe that even though many people feel that sodium-ion may pose a challenge to lithium-ion battery, it might be a competition. But I'm more of the view that it will complement the industry instead of fighting with it because of the properties of sodium. So unsurprisingly, manufacturers prefer sodium-ion battery because sodium is widely abundant. So in terms of production last year, if I remember correctly, sodium carbonate is in around 58 million tons, whereas the entire production of lithium is at 0.7 million tons. So you can see the vast difference in terms of production and the cost as well. So sodium carbonate last year averaged at around 175 USD. And do I have to mention how much lithium cost last year? It's around 45,000 USD average of the entire year last year. So yeah, a bit of advantage towards sodium ion. But the fact is that because sodium ion is larger in size, so some people feel that it may not be very suitable for portable charging devices. They are very small, and EVs because you want to go light, right? Because the heavier the EV, the more energy you need to drive. So some people are of the view that sodium ion is actually more suited for energy storage applications. So there will be a bit of a niche market for sodium, but it may not necessarily compete with the EV industry, I would say. Yeah, feel free to add on.
I will, I think. And, I love to talk about the sodium batteries. It's one of the things we do. I just want to mention that my views on the LFP versus NMC chemistry is such that, so NMC will still be a performance battery. It will still be high energy density. Cyclic life is debatable. There's some literature out there in debating whether it is comparable with LFP chemistry, especially if you limit the nominal voltage window. But the question is then, what kind of performance you need for a mass market car? And that's where the line starts to shift between the LFP and NMC, and that's why we see the eroding, well, in my data, the eroding market size for the NMC. Of course, you have pack level improvements for the LFP as well, and that also helps. So for the sodium-ion batteries itself, if you look at conventional cathode chemistries, you will see that the performance, so in research-wise, we are still looking for a good cathode chemistry for sodium-ion batteries. If you look at the conventional stabilized cathode chemistries for sodium-ion batteries, it is still quite low energy densities, about 100 or less kilowatt hour per kg. So on that basis, I think the entry points for this will be really micro-mobilities. This includes your e-bikes, this includes your e-scooters, this includes even very low-range cars. So it is not a competition for the performance, high-capacity batteries, but and I think sodium-ion batteries is going through the stage of how lithium-ion batteries is evolving. The limit for it now, in this case for manufacturing, based on my understanding from our consortium members, is really the supply chain for manufacturing of sodium-ion batteries. Supplying manufacturing grade, manufacturing size suppliers for this space is still building up. And that comes with really whether there are manufacturers in sodium-ion batteries, and they seem to have made the first move, so the supplier then will catch up. And when that supply stream becomes popular, then you'll see more players going into this field. And then that pumps money into the R&D, and you see whether then this chemistry can be in competition with the high-performance battery. So currently not so, but it is something that, especially in the R&D field, we are definitely looking at.
Well, okay, I'm preceded by two experts and talking a lot of technical details. So everything I say now is a mere shadow of what they're saying. LFP versus NMP discussion first. On this, I mean, from a consumer's point of view, or rather, maybe automaker's point of view, I think it's getting clearer in the sense that automakers want a car that has a very, very long life, long battery life, and sufficient but not maximal performance. So LFP batteries with cycles, about 2,000 to 3,000 cycles versus NMCs at 800 to 1,200, right, if I recall correctly. That's one major downside of NMC batteries. Like Leah said, instability, and that's mostly what causes the short cycle life and therefore the short lifetime of the batteries. Now, that tilts things in LFP favor. Do consumers really need maximal acceleration in where they buy the cars, where they use the cars in big cities? I don't think so, because we just had the F1 here, right? I don't think we can go F1 speeds here in Singapore or in any other major city. An LFP battery has more than enough acceleration for all city use. Range-wise, they're about almost comparable, plus minus 100 kilometers maybe. Okay, now that's all I can say about the technical side of the batteries. But from a user perspective, now let's say, LFP. CATL just came out with that battery announcement, the very hyped up 400 kilometers in 10 minutes thing, right? Now that I see is going to really, really change consumers' view of EVs. Charging anxiety is gone, range anxiety is gone. If you can pop in with your LFP battery EV into a petrol kiosk, get it topped up 300 kilometers, 400 kilometers range in 10, 15 minutes, about the same time as you would take, almost about the same time as you would take to pump a petrol car, no more charging anxiety, okay? And if you can get that range in 10 minutes, no more range anxieties. We'll go on smaller batteries even. So that to me tilts the battle entirely in favor of LFPs. Do NMC batteries have a similar product offering, same range in 10 minutes? I haven't seen anything so far. Please educate me if you've heard anything, but I don't see that. And if that continues to be the case for the next 2 years, then LFPs, I think, are totally going to dominate the market. Sodium batteries, like Chiam pointed out, yeah, for ESS, please, only for energy storage systems. I saw the specs for that battery. Was it Hainan or BYD car that had the sodium battery?
Seagull.
Sorry, Seagull.
Seagull, yeah.
Yeah, 0 to 100 in 7 seconds, right? What, your LFP car does that in 1.5 seconds. And some students recently just did something below 1 second. They just set a new record below 1 second. Yeah, so that's the comparison between lithium and sodium batteries. So I don't think sodium batteries are going to be used in cars much, given this sort of performance differentials.
No, I think I agree. I mean, this debate will continue. Time will only tell which is going to be the more prevalent battery chemistry. But the way I look at things is that if people are projecting that the EV and the storage industry is going to grow by 30, 40, 50%, so if you split this 30, 40, 50% growth, some of that is going to be attributed towards the NMCs, LFP, sodium ions. All of these will contribute to this massive 30 to 50% growth in the EV and the energy storage space. One interesting thing that I was reading somewhere, and there's some research going on that, maybe Singyang will be able to give more ideas on that. People are also working on having multiple chemistries in one cell. Is that something that you see more prevalent? Maybe you can have a module which can have, let's say a few cells of LFP, a few cells of sodium ion. Does that even work? Because there's been some discussion on this recently.
Probably not in one cell, but in the same battery pack. Yes. So there are hybrid packs available of different chemistries. And what you need there is really to, because for example, your LFP and NMCs, which are the most common combination of the hybrid packs, they just work on different voltage systems. At the string level, you just need to control it. It is not, so it's a system level solution, but probably not at the cell level, to my knowledge, yeah.
So now that we have an expert on the panel, so I'm going to change the focus slightly from cathode to anodes. Right. So across all, I mean, of course, we've got different cathode metals. On the anode side, the only one dominant metal is graphite, right? And people are talking about the natural graphite versus synthetic graphite. Synthetic is more, it's more useful given its predictability of quality and all of that. So do you see, and again, even in graphite, I think more than lithium, China has got a massive control or dominance, probably greater than 90% when it comes to natural graphite. And there's a significant amount of investment going in synthetic graphite as well. So I think one of the questions I'd have is, Singyang, is do you see graphite being replaced by any other mineral, or that's a given there's so much of graphite in the market, people are just focused on cathode? Because I think based on my understanding, about 10% of the cell cost is still graphite linked, right?
No, yes, I think the next level of breakthrough, if you may, is going to come from the anode side of things. I'm sure you heard about silicon-based anode. And that itself, so silicon as additive is already in the anodes, it's already in the batteries. So we are looking at high silicon content, and we are looking at 30 to 60% silicon content, which is difficult, but there are a lot of startups already doing this. That has not make its way into high volume manufacturing yet. I think that's the next phase where high silicon content will really be there. The next phase for then the anode is really lithium metal, which then makes I guess the demand for lithium even higher, even higher.
What about sulfur?
Sulfur is a chemistry where I think 5-8 years ago there were some companies who reported very stable chemistries with sulfur. We also looked at sulfur. We could not replicate the results, and those companies did not do that as well. It is a chemistry where I think the high volume manufacturers will stay away from for a while. The reason is that if you put sulfur in your manufacturing line, then probably you can only do sulfur-based chemistry. So you can do it at a smaller scale. Then when you're scaling up at the piloting stage, the question is then, which line do you use? Do you invest in this?
Is it a contamination?
It is a contamination issue. But the stability of the chemistry-wise, currently, if you can get about 500 cycles for sulfur-based chemistry, that's already very good. But that does give you better performance, especially in the gravimetric sense. That means if you're looking at the aviation space for battery, that is a good chemistry. Volumetric sense, actually, sulfur-based chemistry doesn't add much. So that is also a reason for the slower development, in my opinion.
So I guess we'll just leapfrog that straight into lithium anodes, lithium metal anodes.
That is definitely happening. So especially with the solid-state developments, they would usually come with lithium metal pairing. Yeah.
All right, so I want to just double check with the audience if you have any more questions, on these technical aspects, looking at battery chemistries and stuff, before we move on to the kind of investment and financing side of things. Yeah, back here.
Hi, it's interesting. We always look at the front part, the supply chain and all your manufacturing technology. But what about, afterwards? Your battery cells, they will degrade and then you have to dispose of them. So the technology for doing this, how should we think about it? Is there value downstream after the car? Because, we heard some horror stories that, you dent your battery, you need to replace the whole pack, in a car. And people are telling us that, the battery pack itself costs as much as half the car itself. So it could be a big issue that is going to await all of us, say in Singapore 10 years down the road, because our COE only lasts us 10 years, right? I doubt the battery will last that long anyway. So there is a huge market potential, or the big elephant in the room is everybody's producing, lithium batteries like there's no tomorrow. But how about disposing them?
I think that leads into a good discussion that Sing Yang and I were having just before we came on stage. Maybe you want to talk a little bit about kind of that aspect.
Yeah, sure. I think in the recycling space itself, so end of life, for us, we look at two possibilities. So one is repurposing, and then one is recycling. For me, the repurposing space is going through a period where it is probably make or break. I think we are still trying to see whether repurposing will play a big role globally. And there are plenty of reasons for that. There's competing chemistries that's coming on cheaper and better. You're competing with a product that is 10 years old. So that is a major competition for these repurposing companies that we have in our consortium as well. The recycling space is very interesting. You already have technologies that you can recycle, and I meant that by extraction of the key minerals. So if you're talking about lithium, cobalt, nickel, so those technology are there. There are technologies like pyrometallurgy, hydrometallurgy, and for us, we are looking at even more advanced technologies like electro-assisted hydrometallurgy. It is something that we are working on. The issue with recycling is not so much, I think, whether you can extract the minerals, is at what cost do you do that? Is at what CO2 footprint do you do that? That, I think, impacts a lot on the circularity of a battery itself. Currently, if you look at hydrometallurgy, I think the CO2 footprint is good. I think the cost may be high. but this is, you can still sort of make a little bit of money from it, from what I understand, but this is for example, the cobalt-based chemistry. The LFP chemistry is harder to make money from. You see a lot less of that. There are reports of plants opening up, looking at that chemistry. But so far, I think that remains challenging, which is why, in the R&D sense, it is one of the focus areas for us to make this profitable. Yeah.
Let me also add here, I think circularity of batteries has been going around for a while, particularly in the lead-acid battery space. It's a pretty established industry globally. Of course, it's a bit polluting on the lead-acid battery side. And I mean, I personally know about a dozen of these lithium-ion battery recycling startups, and everyone claims to have super efficient hydrometallurgy, pyrometallurgy, as Singyang just mentioned. I think the bigger challenge, and of course that will happen, right? I foresee that in 3 to 5 years' time, there will be dozens of these recycling companies, and each of them will have very good deals. Somebody will be able to extract lithium more beneficially, somebody will be able to extract cobalt or nickel salts more beneficially. So there will be enough industry there, but the bottleneck will be the availability of feed, right? So it'll still take another 5, 10 years, maybe even more, to have that kind of feed so that the recycled products become mainstream, meaning they become a significant portion of the overall lithium ecosystem. For example, in primary metals, aluminium and copper have been around for decades or centuries. So I think if I remember the stats correctly, at least 70-80% of aluminium ever produced is still in the ecosystem because it can be recycled infinite number of times. For a new thing like a lithium-ion battery to get to that stage, it'll take decades. But yes, I think that's where the feed gets more important, and I think in some years' time this will become a bit more geopolitical. The countries will not want this feed to be exported out, and so much, and not just the countries, even the car makers will probably incentivize consumers to give back the old batteries so that they can recycle and make new batteries out of those. So this is an evolving industry, extremely exciting, but it'll take a lot of time for us to get to that stage where it forms a major portion of the overall lithium or any other battery mineral ecosystem.
I'm wondering if anyone has any, predictions on, what that future balance between new metals versus recycled metals to kind of fill that battery ecosystem will be. Maybe that's it.
If you look at the recent European battery regulations, then that gives a hint of what they expect. And I think it was like something like 10% of recycled content in terms of these minerals. And that's by 2030, I think.
Okay.
Yeah.
But until the industry fails to meet those, and then they lower it.
We set a higher standard. So we actually have a sister company, S&P Mobility, and they did a recent research into this area. So their forecast is that by 2030, actually 40 or close to 40% of the cobalt supply will be from recycled materials. And that percentage is lower for lithium and nickel, about 10 to 15%, partly because of what Vinit brought up about the feedstock. So because cobalt has been around longer and is also used in our smaller appliances like phone, tablets, and all that, LCO batteries. So currently there's higher feedstock for that, which is why they're able to get more cobalt out of it. And I think the thing that Singyang mentioned just now about the cost of recycling is also very interesting because I agree that for LFP battery, definitely the cost outweighs the pros if the cost of recycling is very high because you're just getting lithium out of it, and iron phosphate is very cheap. You can just get it off the market. And this is also something that implicates sodium-ion battery because sodium is so abundant. So one of the concern about sodium-ion or the production of sodium-ion battery is that there may be no incentive for manufacturers to recycle these materials because you can just get sodium off the market. So this would definitely also pose a ESG concern for the manufacturing of sodium ion. Yeah.
So, looking at kind of a 10% potential for recycled materials also means that we need a significant amount of new metals to be entering the space. So, changing the focus a little bit to look at the financing side of things. Exploration is one of the keys to, essentially ensuring that the energy transition can happen and that EVs will, grow in market share. So, where do you see the financing coming from, and what types of projects do you see it really going into? Maybe YJ, if you want to kick us off.
Okay, financing. It's plenty of sources out there right now, actually, given how cashed up some of the companies are in the industry. So last year we went through a nice period of high lithium prices. So we are seeing lithium companies sit on literally billions and billions of dollars of cash. So Pilbara's got 3 over billion Aussies. Albemarle just came out with a 4+ billion bid for Liontown. And even companies like Tianqi, which were insanely indebted just 5 years ago, 400% net gearing, I think, is now in a net cash position, right, and ready to make new acquisitions. So I see a lot of financing potential from even within the industries, from those guys, the big boys that are already producing, and then new money is likely going to come from outside the industry in adjacent producer companies, your big boys, Glencore, BHP, Rio, eventually are going to move into lithium. Right now, they are Rio, I think, is buying up land parcels around Australia, right? So that's happening, but it's a very early stage thing. Eventually, they're going to clue on that, okay, I want cash flows earlier, and I'm going to bid a higher price for some of these guys that are nearer production. Never mind, I'm going to make back that cash in 2 or 3 years, and then they'll take the deal. Yeah, and then of course, not forgetting the oil majors. Eventually, they're going to look for some other place to deploy their capital. Yeah, now oil is still high and it all looks good, but when oil eventually, or maybe goes through its next cycle, then they'll come back into this other space.
I don't think I have anything to add. I have a question actually. I was wondering whether the money is going into the extraction phase or the processing or both.
Okay, there's a lot of money right now going into processing, refining, and even consuming in the sense of battery manufacturers. So a lot of government money funded by IRA, funded by eventually your Europe Critical Resource Minerals Act and all that, are moving into the what we might call slightly downstream segments. Upstream mining, not a lot of money has gone in. Partly also because of political pressure, like the green side of the politics don't like mines. Okay, no matter how much mines are required for the energy transition, they still don't like mining. Yeah, but then also we see car makers like end customers like car makers, GM putting 650 million into Lithium Americas. Okay, and other car makers like Ford tying up with battery plants and then signing long-term offtake contracts with mines. And these offtake contracts are not just offtake, pure offtake. They come with 50, 100 million of cash upfront. Yeah.
On the financing side, I see more non-traditional sources of financing into this space. One, because we've all talked about different chemistries. We never know in 5 years' time which will be the dominant chemistry. So I think traditional sources of financing like banks will try to shy away from these investments, whether it's a lithium mine or it's a lithium refinery, because typical project finance risks and mitigants doesn't work in this kind of a structure. So all we are seeing is that the banks are financing the EV makers or the battery makers, who in turn are injecting capital into these projects. So it's an indirect, sort of an implied bank money going into this system. Other than that, I think on the upstream side, on the resource side, I see only miners looking at these things. Again, it's been more new miners rather than the old traditional miners. The only acquisition that I've seen, or not an acquisition, the only real announcements I've seen in the last, let's say, 2 to 3 months in this space is Rio making an announcement about a very small project in Rwanda. Again, that's a very, very early stage prospecting. Glencore making a similar announcement for a project, early stage lithium project in DRC. So other than these, I've not seen much, none of the big boys have sort of, demonstrated or shown any interest in injecting serious capital or having their name behind these projects. BHP actually came out, I think, a few months ago and said that they're not really interested in lithium because the curve is not steep enough. So that was a very interesting statement for BHP to make. But I think the miners will continue to invest in upstream. It's only the traders who will actually have to push the envelope a little bit, and that's where they're trying to hedge their bets. I'm speaking as a trader. So the traders will end up investing both on the upstream and on the downstream, because sometimes the value lies upstream, sometimes the value is midstream. So I really see and hope that traders take a more active role in investing into this space, particularly now with the IRA. There's so much of capital that's available. It's just it takes somebody to just take a call and take the next step. So that's where I see things going ahead.
I mean, speaking of the IRA, leads really nicely into my next question, which was really looking at, the impact of similar, the government regulations such as the IRA. Canada has similar, Europe has similar regulations that they're coming out with in terms of the battery space and the supply chain. So, how much is this impacting where the money goes and who's able to invest?
Okay, maybe I can start first. We're all shy people. I guess IRA has been like the hot topic since last year, right? When it rolled out in August. And I think I've never seen another country putting $500 billion in terms of tax credit into this pushing for investments and energy transition. So definitely it has made a lot of positive impact. Our analytics team forecasts that the demand for these critical minerals like lithium, nickel, cobalt has actually increased by 23 times going into 2035 compared to pre-IRA period in 2021. So 23 times in terms of demand is a crazy number because before IRA was announced, the forecasted demand was only 15% increase. So you can see like how much of a growth is expected from IRA. But I would say that there's also a bit of a limitation because of how IRA is constructed. So they want the supply chain to be based in the States, within US, or trade flows with FTA countries. But the thing is, a lot of these critical minerals are not from FTA countries. Like even for US itself, currently this year, their main imports are from Argentina, about 44% of their lithium imports. And Argentina is a non-FTA country. And then they also import some from Chile. And Chile has a long-standing trade relationship with China. So most of their lithium production actually goes to China. So it's a bit of, I guess, a paradox, difficulty in terms of these areas. And if we talk about nickel, right, Indonesia is the world's global primary nickel producer currently. And its dominant position is only forecasted to go stronger and not diminish over the years. So we're looking at about 90 to 92% of the nickel production that is from non-FTA countries. So I'm not sure how US is going to achieve their goal. But yeah, there will be difficulties for sure.
Maybe recycling. So the maybe I'll add a bit from my point of view, especially from the R&D side. I think the IRA does inject a lot of capital into the battery cell manufacturing space, not only to localize their supply chains, but also to look at cell manufacturing within the States. talking to some of the US companies, this really helped them a lot. But coupled with their export control on, for example, batteries more than 350 kilowatt hour, 350 watt hour per kg type of energy density, they are then looking at this region within Asia Pac in setting up not only the R&D but also satellite space in battery cells manufacturing. So because of the injection of capital they have from the IRA, then they have the muscle and capacity then to look at setting things up, for example, in Singapore or within the region. So that has really helped us a lot as well in talking to and working with these companies to see what we can do both in terms of the development space and hopefully subsequently the manufacturing space.
Well, on the IRA, I think we first have to view it as a political tool rather than an economic tool. So its main aim is to move the supply chain away from China, out of Chinese aligned supply chains and countries towards the Western Bloc, right? And that means that, in effect, they are trying to create a parallel supply chain to the one that's already working in China. That's the political side. And the economic side of it is that you're going to have two supply chains, one established, low cost, low capital intensity, running up against, or rather the new one running up against this well-established one. The new one is high capex intensity like Australia and US, and high cost to run. Not to mention even the higher cost of inputs because they mostly import the raw materials anyway. So what do we see here? We are going to see a world with two parallel supply chains, and if the US tries to freeze out Chinese products out of major markets, then we are going to see a duplication of demand from these Western factories on top of what's already in China. I don't see an end game to this. It's weird. It's a weird situation. What do you want? Two supply chains with everybody running at 60% utilization rate? But that, to me, looks like the most likely outcome right now.
No, I think you're absolutely right. I completely agree. I think, in fact, what IRA is doing is, given the different conditions in the IRA, there's a lot of money of IRA which is going into the processing side of things rather than actual investment into resourcing, because obviously the resources are not as much in US as in other countries. So that's one of the sort of, not the shortcoming, but that's reality, right? That's a fact of life. Either you have resources or you don't. And the places where you have resources, people have issues about human rights and traceability and sustainability and all those things. So that is always going to be a challenge. For example, even Europe. Europe is, on one side, Europe is trying to diversify itself from Russian gas. And now the European Critical Mineral Act, what they do is they are just going to take the European dependence from Russian gas to Chinese critical minerals. Right? So that is what is going to happen. So it's quite funny, quite strange how geopolitics is going to play out. But I don't see the complete decoupling of China or US or Russia. All these things will end up coexisting. So if you look at it from a more like an optimization problem perspective, there will not be any global optima. There will be some local minimas, local maximas here and there, and that's how the outlook will shape up in coming times.
In other words, we just follow through.
Are there any impacts that we've seen from these types of regulations already on the markets? Or have there been big moves, big deficits in certain places?
Substantially. I think IRA has witnessed a massive attraction from the Koreans, the Japanese, the Australians. Everyone's making announcements, all the big boys, even the miners. I was recently reading General Motors has tied up with an Australian manganese mine to set up a high purity manganese plant in the US. So there's a lot of traction going on, but again, it's all within the US/US FTA countries.
Well, and if you look at we all follow benchmarks battery pipeline, right? And what interests me most is how much that's changed in just the last 1 year. So the 2030 pipeline was something like 7 terawatt hours, and now it's 9. That's insane, all right? Don't even look that far. Look at 2025, right? We are now talking about a pipeline of battery capacity in 2025 of 4.7 terawatt hours, 4,700 gigawatt hours. If you do the math, We don't have the lithium for that. 4.7 terawatt hours requires about 4.5 million tons of LCE, right? The 100 over mines that are going to be producing by 2030, not 25, can produce about 3.5 million tons. So 5 years ahead of schedule, we are already in a 1 million ton shortage if all of these battery companies, battery factories are constructed.
Right.
And it's 2025, it's a 25 pipeline. They are already under construction. So this is why we think that, like you said, the IRA is pushing so much money into investments downstream. The upstream has no chance to catch up.
But the other potential reality is that then they wouldn't run at capacity, which is something that we are seeing now from the reports of how the manufacturing, cell manufacturing is, the capacity they are running. I mean, 60% is quite common, and it maybe, so there is inefficiency when you pump money in, so I think that's at least I guess a theory for free trade. So the inefficiencies, it depends on how long the IRA will be there for, and how that, if it is removed, then how globally how things will shift. Yeah.
Do we have any questions from the audience before we start to wrap it up? I guess, my last question for the panelists then is really, looking forward, what would you kind of encapsulate for this industry as the biggest risks, things that people should be kind of top of mind moving forward?
Look, I think we've mentioned this, and pretty much all of us agree. On the resourcing side, there is a big risk that we will be sitting with a huge processing capacity, but not enough resource to feed. So I think that's going to be a big gap. And the only way that gap is going to be close to fulfillment is hard rock mining is going to take. I'm talking specifically about lithium because that's the more prevalent material. So I think hard rock is going to take its own time, 3, 5, 7 years. It's anyone's guess how long it takes to start a mine, depending on the jurisdiction, the nature of the reserve, and all that. The real sort of technological I'd say a sweet spot I see here is in the on the brine side of things. There are new technologies like DLE, direct lithium extraction, coming up, which can actually change the game. They can completely make a new curve when it comes to the availability of lithium carbonate units, which is going to be more in demand compared to lithium hydroxide, right? So if more companies and more technical people deploy DLE technologies, and there's more advanced work done on that, that can actually bridge the gap to some extent, particularly in Latin America in new brine fields, rather than hard rock. Hard rock will still be prevalent because that will give the volume, but that will take a lot more time to come on stream.
Yeah, I agree with Vinit. So last year I went to visit some of the Australian miners, and they shared with me that realistically speaking, it takes more than 10 years for a mine to come online, all the way from scoping, feasibility studies, construction of the mine, and to actual production. So actually all the mines that are being invested right now will only come online towards the end of the decade. That's how long it takes. So I completely agree with you. With regards to the DLE, the new technologies, definitely a lot of pros. But I think one of the concerns from DLE is also the water supply, because it requires a lot of water. So all these technology, that will come with it a lot of pros and cons. It's just how we weigh each side and how we approach the con side of things as well.
Maybe I'll make a pitch or talk about recycling. So I thought, so that has been something we are focused on. So like what Vinit said earlier, I think now when the feedstock is low and the demand is high, this disproportionate case of whether recycled content can supply for cells will be a problem. If the demand is expected to pick up, then you see a very high influx of feedstock. And at that point of time, then for me, recycled content can be a competition for mined content, especially in terms of cost, in terms of carbon footprint, and if for people pursuing circularity, that becomes very important. And regulations will play a big role in this. So that to me is one possible shift in this space. But having said that, if you look at recycling, it is not so far away from the processing part of mining. It's essentially leaching, essentially precipitation type of process, which means that it's also a space that capability-wise that the mining community can go into. So that's how I see it.
So can I make a pitch to you and to Singapore Battery Consortium on recycling? I don't think Singapore has got a battery recycling plant yet, whether it's on the, you have?
Yeah, we have. So TESS operates at about 5 kilotons a year.
Okay.
And then secure waste, I think, I can't remember the capacity, but both have been working with our regulators to try to meet our own e-waste coming up, which is projected to be about, I think, 8 gigawatts hour a year when it's full electrification and beyond. So we are positioning for that,
Okay.
but we also recognize also that the profitability is important, and that actually calls into question of whether we can import waste, because then for us we can't just serving our local market is really for our own sustainability angle, but then for the business to be viable and successful is then whether we can look at regional market, but then that's where the transport of battery waste and black mass becomes an issue.
Not just for lithium ion, I think even lead acid, because I think if you look at the trade data, Singapore pretty much exports all of the lead acid batteries, and there is a lot of Singapore, although it's a low population jurisdiction, but the consumption per capita is significantly higher than the neighbors. So there's a lot of lead acid batteries that are exported, remelted in various Southeast Asian countries, and they find its way in the new batteries and come back to Singapore. So not just lithium ion and e-waste. I think we need to set up, as Singaporeans, we need to set up a little more of recycling ecosystem. Invite people to set up recycling plants, because these days a lot of recycling plants, whether it's any form of battery, are more environmental friendly, and Singapore can actually be a good pilot, which the whole world trust in terms of in terms of viability, as a good test case for various recycling plants to set up a pilot plant in Singapore, which can actually benefit Singapore and industry in general.
Where we are talking about recycling, I mean, I would like to make a point. Xingyang actually alluded to it just now, repurposing and recycling. I think there's too much focus in the world about recycling. It's a nice hype to it, and companies try to do it. But I believe that repurposing should come well ahead of recycling. Batteries that are used in cars, especially the new lithium-ion batteries, they are far from being dead at the end of 10 years. Okay, they can definitely be repurposed into energy storage systems, stationary storage, and I truly believe they should go there first. Recycling, to me, I think, should be a last resort when all of the other options have been exhausted. Then you try to recycle and reclaim the minerals. That, I think, would be a better use of our resources globally. And just to tie it back to what Amy was asking about just now about risks in this whole discussion. Well, as an investor, risks are just places that I avoid, or they inform where I could be wrong about where I think I'm right. So I think to wrap up a little bit about what we've discussed, I think we agree that there's going to be a huge oversupply in terms of battery capacity in the next few years. Okay, potentially even a terawatt in excess of what the world needs. There isn't enough. There's a lot of money going into the processing, but at the same time, because it's a highly capital intensive and competitive industry, there's going to be a lot of competition there. Margins are likely going to be squeezed as well. So these are the two areas that I think are highly risky. But in a gold rush, you don't go and try to be the one that finds the gold. Sell the pickaxes to the people rushing after the gold. So as investors, I think the better place to be would be selling the pickaxes, where and in this using this analogy, that's the lithium mines, the nickel mines, etc. The mines that produce the raw materials that feed into this gold rush.
I think that's a very good place to wrap it out. We've got one question before we wrap it up, but it's been quite an interesting discussion so far today.
Thanks, everybody. Fascinating discussion. Poses a lot of questions as well. Very interesting point that you made, YJ. Policies such as IRA would potentially lead to the creation of parallel supply chains, potentially even a polarized world. So since we have Vinit here as well, does these parallel supply chains, if we ever get there, or a more polarized world, does that limit opportunities for commodity traders? You come from a trading background. What implications does that have for commodity traders?
No, I think it's both good and bad for commodity traders. I think some global commodity traders may struggle a little bit because things are going to be more localized and regionalized. Like for example, I represent essentially an Indian-based trading house with more Asian footprint. So we will have a clear advantage in the supply chain which revolves around India or Southeast Asia. For example, there are some European traders who will have their home ground advantage in other locations. Chinese traders will have their home ground advantage elsewhere. So the traders are generally nimble, but ultimately it comes down to where your sweet spot is and where your home ground is. And home ground can be either the supply side of things or the demand side of things. So there's an opportunity everywhere. And I think the global traders will need to be more localized if they want to really be a global player across new products. Otherwise, it'll be the more niche regional players who will be leaders in these new critical minerals.
Interesting, thank you. So there are going to be some winners and some losers perhaps, and some scope to kind of change your strategy in that sense. Interesting, thank you.
Absolutely. All right, well, that actually brings us to the end of the hour. So I really want to thank the panelists for joining me up on stage today. Let's give them a round of applause before our next presentation.